So you're thinking about making a move to the greater Boise, Idaho area, but have no idea what's happening in our real estate market. Well, I'm glad you're here. Welcome to Mikey's monthly market updates for September of 2024. My name is Mike Peters with MPRE Residential, and in this video, we'll bring you insights and updates from real estate trends happening right here in the Treasure Valley. If you're looking to stay ahead of the curve in our ever-evolving market, or you are looking for the information that allows you to make the most informed decisions on buying, selling, or investing right here, you've come to the right place. So make sure to hit that subscribe button below, hit the notification bell so that you never miss an update in the future, and let's get started. But before we do, if you'd like to begin your home search in more real time than websites like Zillow, Realtor.com, Trulia, please visit www.mpre.homes and sign up for your personalized home search today. And no worries, I won't spam you. And if you're looking to sell and want an idea of what your home is worth in today's market, also visit my website. Click on the Home Evaluation tab in the upper right-hand corner to obtain it. You most likely will hear from me, but again, I pride myself on being a non-pressure real estate agent. If at all, I would simply like to introduce myself in the phone call and let you know how I can be of service when you're ready. So let's get to the information and start off with Ada County like we normally do. And as we can see by this slide, the median home sold price on a county level dropped for the second straight month in a row, as anticipated. But why is it dropping? We'll get to that in a second. But as we can see by this graph, we are sitting at a median home sold price of $535,000. In comparison, this is down 0.92% from January of 2022, down 11.16% since a peak home value of $602,250 in late May, early June of 2022, but has made gains of 8.87% since the end of the market correction in January of 2023, when we were sitting at $487,495. So overall, the real estate markets in Ada County have been chipping away at the losses incurred during the market correction. Since last month, the median home sold price lost $10,000 in value, which is down 1.83%, and has been on a downward trend since June. Why is this though? It's because of supply and demand, the key factor in how real estate, much like everything else, is valued. Looking at inventory versus buyer's demand, inventory is still on the rise, sitting at 1,781 homes available for sale, with only 720 selling in the month of August, placing Ada County at 2.47 months worth of inventory. And what about the buyer's demand? As we can see by the pending line in orange, buyer's demand is gaining some steam. And why is that? For more information on this and the best strategies on how to succeed in buying, selling, or investing right here in the Treasure Valley, stick around to the end of this video where we'll go ahead and discuss just that. So if the inventory is on the rise, which category is adding the most to the total single-family homes? Breaking it down, we can see that existing homes have 1,055 homes available for sale, with only 489 selling in the month of August, placing us at 2.15 months worth of inventory. And looking at new construction, the same trend has been occurring since January of 2023, with 726 homes available for sale and only 231 selling. Overall, inventory has been on the way up and buyer's demand has been on the way down, especially over the last few months. This is why the median home sold price has been dropping as anticipated in my previous Mikey's monthly market updates. This is because sellers have been losing their edge to attract buyers. More competition in the market means price reductions, which have been occurring around the Treasure Valley. And this is reflected in the median home sold price for both existing and now new construction homes. Again, by this graph, we can see that the median home sold price dropped for the second straight month in a row to $525,000 for existing homes. This is down 2.77% since last month. However, existing homes have been sort of bucking the odds. Since the end of the market correction in January of 2023, existing home median sold price has gained 9.52%, and since January of 2022 has gained 1.88%. However, since the beginning of the market correction back in late May, early June of 2022, it is still down 10.52%. Well, what about new construction? New construction has actually made a gain since last month, but not a very big one. In fact, over the last few months, and really since the beginning of the year, new construction has basically flatlined, only rising 0.54% since last month, but still significantly down from the 588,945 in January of 2022, 6.62% down to be specific, down 20.30% since the top of the market in orange, but slowly chipping away from the market correction low of 494,900 at a rate of 10% in gains. So, how about the health of the real estate market in Ada County? Well, this is determined by two things: the days on market and cancels and expireds. Looking on the days on market, we have been on the rise, and is expected to be so this time of the year, leading into slow season, which is quarter four to quarter one. We can see that we hit 37 days on market for the average sale, and when the days on market hit high levels like we saw in January of 2023, this means that the seller's market is struggling. When this happens, we can anticipate prices to come barreling down, which they did. In the opposite, when they crash down to low days on market, we can anticipate the opposite, sellers having a massive advantage over the buyers, which they also did. But looking at the trends today and back to 2019, we can see that we're basically at a balance. So, have our markets returned to normal in Ada County? Stick around to the end of this video where we'll discuss just that. What about cancels and expireds? Well, for the second straight month in a row, they've both been on the rise. While expireds are generally those holdout sellers that want their price and refuse a price reduction until the end of their contract, cancels, however, are generally more of the trend that we should be looking at. And the rise in cancels can mean a few things. It can mean that sellers are getting cold feet and pulling their homes off the market. It could mean that buyers couldn't get the interest rate that they were looking for and fell out of contract, which led to a subsequent seller cancellation. Or in this case, it's probably because of seasonal swings. Sellers know, just like real estate agents, that the markets cool down during quarter four. The holidays are also right around the corner and the kids have gone back to school. So what can we expect? This number to rise. Overall, however, by the days on market and the cancels and expireds, the overall health of the real estate market in Ada County is looking okay. Nothing super alarming seems to be showing in the data. All right, Canyon County, it's your turn. And as we can see by this slide, the median home sold price on a county level dropped, as anticipated. As we can see by this graph, we are sitting at a median home sold price of $411,990. In comparison, this is down 3.03% from January of 2022, down 13.5% since the peak home value of $476,500 in late May, early June of 2022, but again has made gains of 4.01% since the end of the market correction in January of 2023, where we were sitting at $395,445. So overall, again, the real estate markets in Canyon County have been chipping away at the losses that were occurred during the market correction. Since last month, the median home sold price lost approximately $13,000 in value, which is down 3.04%. But as we can see over the course of the year, it's been up and down. This will be a number to monitor. Again, why is this though? It's because of supply and demand, the key factor in how real estate, much like everything else, is valued. Looking at inventory versus buyer's demand, inventory is still on the rise, sitting at 1,136 homes available for sale, with only 401 selling in the month of August, placing Canyon County at 2.83 months worth of inventory. But what about the buyer's demand? As we can see by the pending line in orange, buyer's demand also seems to be gaining some steam. But again, why is that? Again, for more information on this and the best strategies on how to buy, sell, or invest right here in the Treasure Valley, stick around to the end of this video where we'll discuss just that. So if the inventory is on the rise, which category is adding to the most overall total single-family homes? Breaking it down, we can see that inventory in existing homes has been taking a drop, with 560 homes currently available for sale and only 218 selling in the month of August, placing us at 2.56 months worth of inventory. Looking at new construction, the opposite has been occurring. Inventory has been gaining steam since July of 2023, with 576 homes available for sale and only 183 selling in August of 2024. Overall, new construction inventory has been adding to the available inventory in Canyon County. This is good news for buyers. This is also most likely why we have been seeing the up and down bounce in the median home overall sold price. With inventory rising slightly above levels seen when the market correction took hold in late May, early June of 2022, we can anticipate the median home sold price to continue to come down in Canyon County. In existing homes, the opposite is occurring. We will solidify those best strategies for buyers later in this video. But back to the data. Is the proof in the pudding with price reductions? By this graph, we can see that the median home sold price dropped for the second straight month in a row to $398,750 for existing homes. This is down 3.79% since last month. Since the beginning of the market correction back in late May, early June of 2022, Existing homes are still down decently, 6.17% to be exact. Since the end of the market correction in January of 2023, existing home median home sold price has gained 9.52%. But existing homes in Canyon County overall have been making significant gains. Since January of 2022, the existing home market has gained 2.19%, and since the end of the market correction in January of 2023, the market is up a whopping whole 14.98%. And why is this? Because of affordability. Existing homes in Canyon County are obviously more affordable than they are in Ada, which has attracted more buyers. So, what about new construction? New construction has lowered for the second straight month in a row, but again, not by a very big drop, only dropping by 0.93%. New construction is still significantly down from the 465 in January of 2022, 6.62% to be specific, and even further down since the market correction in orange by 22.60%. How about when the market correction stopped in April of 2023? Gains for sure, but significant? I wouldn't go there, just up 4.48%. So if you're looking for the best value, is new construction or existing homes in Canyon County going to be it? Stick around to the end of this video where we're going to go ahead and discuss just that. How about the health of the real estate markets in Canyon County? Well, again, it's really only determined by two things: the days on market and cancels and expireds. Looking at the days on market, we again have been on the rise, and is to be expected for this time of year, leading into slow season, Q4 to Q1. According to the data, we can see that we hit 49 days on market for the average sale. And again, when the days on market hit high levels like we saw in January of 2023, this means that the seller's market is struggling. When this happens, we can anticipate prices to come barreling down, which they did. When they're down to low levels, like we saw during the pandemic, we can anticipate the opposite: sellers having a massive advantage over buyers, which they also did. But looking at today's trends and back to 2019, we can see again that we're basically out of balance. So, have our markets returned back to normal in Canyon County? Stick around to the end of this video where we'll address just that. How about cancels and expireds? For the second straight month in a row, both have been on a rising trend. While expireds are generally those holdout sellers that want their price and refuse a price reduction until the end of their contract, cancels, however, are generally more the trend that we should be looking at. A rise in the cancels can mean a few things. It can mean that sellers are getting cold feet and pulling their homes off the market. It could also mean that buyers didn't get the interest rate they were looking for and fell out of contract, which led to a subsequent seller cancellation. Or in this case, again, it's probably because of seasonal swings. Again, sellers know, just like real estate agents, that the markets cool down in Q4. Holidays are also right around the corner and kids have to get back to school. Heard this before? So what can we expect? The number to rise. Overall, however, by the days on market and the cancels and expireds, the overall health of the real estate markets in Canyon County, again, is looking okay. Well, you've made it this far in the video. Awesome. Of course, if you have any further questions, please feel free to reach out to me. I'm happy to answer. And again, I'm a no-pressure real estate agent, so your phone call won't lead to further spam calls from me and or emails. However, if you like what you see so far and you want to stay in tune with the Treasure Valley or greater Boise, Idaho area real estate markets, please hit that subscribe button, hit the notification bell so that you're constantly in tune with this information, and welcome to my channel. If you are looking to know more about the cities around the Treasure Valley and what they have to offer, pros and cons, and so much more, you can find it by clicking on the links provided in the description below. Also, if you're looking for a more in-depth overview about the cities of the Treasure Valley and what they do have to offer, please click in the link below and download my relocation guide. It's absolutely free and it's a great source to get to know the Treasure Valley before you decide to make the move. So now let's move on to the best strategies if you're looking to buy, sell, or invest right here in our real estate market. So what is the data showing us overall? And is this a good time to buy, sell, or invest, or make any moves in general? No pun intended. Buyers, let's start with you. The key again to home value is supply and demand. And as we saw by the data, supply is on the rise in both existing and new construction, minus existing homes in Canyon County. As mentioned in other Mikey's monthly market updates, I did anticipate the median home sold price to dip due to this, as inventory was outpacing the buyer's demand. And it did. I expect this trend to continue until the buyer's demand accelerates. While buyers are on pins and needles waiting for mid-September and November results, the opportunity to start setting the foundation for a purchase is here. The early bird gets the worm. Because inventory is high and demand is low, the builders in this example are offering great concessions towards buying down closing costs, buying down your mortgage interest rate, etc. Some of these concession offerings from the builders say that they'll end towards the end of the month. However, due to the amount of inventory on their books, I would assume that their concessions will carry over to additional months moving forward, until inventory comes in firm grip with the buyer's demand. Plus, the holidays are right around the corner. Considering this, builders generally and historically offer concessions during this time. While I don't have a crystal ball to their business practices, we will just have to wait and see. However, given the data, I feel confident that builder concessions will remain offered for some time. While you may be saying, time to rush off and get a great deal from the builder, pump the brakes. Remember, working with the builder directly has a huge disadvantage, and that is, who does the builder's agents work for? That's right, the builder. While they may entice you to work directly with them, an experienced agent like myself represents you in your best interests versus the builder. So whether it be me, my team, or another agent you find on YouTube, always hire an independent agent to represent you versus the builder. Don't fill out anything with the builder until you have considered independent professional representation thoroughly. You could place your independent agent in a rough spot otherwise. Furthermore, speaking of the builders, and since the market correction, the builders have taken the biggest overall hit in the median home sold price. Considering the current state of inventory compared to the demand, the home prices are also anticipated to continue to drop. Couple this with lowering mortgage interest rates and concessions offered, new construction is where I'd advise to look for the best deal. But don't discount existing homes. The same trends still exist, a significant gap between supply and demand. Home prices have been coming down due to such. Given this, smart sellers, in order to compete with the builders, should be offering concessions, or at least have thoughts of them should they come up in a buyer's offer. Given this, though, the reality is that not a lot of sellers are offering concessions like the builders are, or are being as transparent about them. Even some sellers, due to the NAR settlement, are also refusing to contribute a co-op offering to a buyer's broker. This could mean that you, the buyer, could be on the hook for your professional representation, meaning you could have to pay for your agent. This also depends on the negotiations you made with your agent at the buyer's representation agreement. Some builders, on the other hand, have already made it known to local agents that they'll offer a buyer's co-op for professional representation. So it can be a gamble in the existing home market as compared to the builders who seem to have pre-circumvented the new DOJ commission transparency rules. A smart business move, if you ask me. As to where, unfortunately now, existing home sellers have their hands tied due to the DOJ. Unfair if you ask me, but hey, I'm no lawyer, or I would have fought this to the death for free. Thanks, NAR. Also, with the equity loss existing homeowners are taking due to the current market conditions, they are generally more apt to be tougher in negotiations for concessions or even price drops, hence the rise in the expired numbers. This is also where an experienced agent like myself comes into play, knowing the pain points of the seller in order to obtain wins for my buyers is crucial. So thinking of working directly with the seller to bypass all of this? It's a thought, but again, remember, this is what real estate agents do. Represent you to win. Saving money on a possible buyer's agent's commission in lieu of professional representation can have its serious consequences when it comes to purchase price, concessions, repairs, appraisal negotiations, and so much more. Call me today to find out more. Remember, the seller wants what's best for the seller, just like the builder wants what's best for the builder. And even dual representation by an agent has its limitations by playing a neutral role between the parties. Having sole professional representation in your corner, in my eyes, is critical. In summary, though, expect home prices to come down a bit more. Also anticipate mortgage interest rates to continue to lower. Concessions to still stick around for the builders as they go into quarter four. However, anticipate a hotter than usual quarter four to quarter one in 2025 as buyers re-enter the market. And also anticipate inventory to lower as a part of the seasonal swings for both builders and existing home sellers. If you're looking to make a move within or are looking to relocate from out of state, then please feel free to reach out to me. I'm happy to help. So sellers, it's your turn. While the last several months have not been the most advantageous for you considering the rise in inventory, aka competition, loss in home value, and the buyers disappearing, this all looks to be turning around. And by what? The fall of mortgage interest rates. And all of the indications are looking as if they're going to continue to come on down via the national economic data. This should mean a hotter than usual Q4 to Q1 for the Treasure Valley real estate markets. So if you took your home off the market and you really want to move, for whatever reason, you may want to reconsider your selling position. This will be especially pertinent as we see the results of the presidential election, especially if one returns to the White House. And while we all have the inkling that the national economic data has been fluffed for the last 2 years, especially when it comes to unemployment, the cracks have shown themselves. And while the problem won't fix itself right away, consumer confidence in the markets will return, almost assuredly. As long as unemployment doesn't get out of control to the Fed's monetary policy, which it could, buyers will come out of the woodworks. This is great news for you. Also, we should expect inventory to come down per seasonal swing trends, meaning less competition. As long as the gap narrows between supply and demand, we should also see a stop to the equity bleeding. If you want to maximize the value you can get from your home with this uncertainty, selling now may be your best option. But again, that's entirely up to you. What are your motivations for selling? But because as buyers pick up because of the lowered mortgage interest rates, this seems to be showing an advantageous period. If you agree with me and you'd like to know more of what your home may be worth in today's market, please visit my website, click on the Home Evaluation tab in the upper right-hand corner, and obtain it. You most likely will hear from me, but again, I pride myself on being a non-pressure real estate agent. If at all, I would simply like to introduce myself via the phone call and let you know how I can be of service when you're ready. I can also set you up with monthly market reports, keeping you in tune with what's happening in your local area. And if you are ready and would like to know more on how we could sell your home in the quickest time possible and for the most money in today's market, please feel free to reach out to me. I'd love to set up a 30-minute appointment with you where we can go ahead and discuss these best strategies and get you to your next destination. I look forward to hearing from you. Investors, it's your turn. And I'm sure the first thing that comes to mind is uncertainty. And you'd be right. There is uncertainty. For example, what's happening with unemployment in the US? Has the Fed held on for too long? Who is going to take office? Etc. All valid questions. But what happened not so long ago? That's right, a quick stock market crash that has since recovered. This showed cracks in the US economy. What this did was telegraph to the Fed and the next administration problems that need to be addressed. In response, the Fed will be lowering the federal funds rate at the next meeting, and probably from here on out for the rest of the year. Also, if a particular candidate returns to the White House, American independent energy will return and manufacturing jobs to the US. While relief will not be immediate, it will come. This should help stave off any large impact caused by a recession. At least in my humble opinion. The stock market is also clearly overvalued. No question about the PE ratios in all major 3 indexes. However, will there be a large stock market crash? Should an unrealized capital gains tax surface and a raise in the capital gains tax occur, this could be relevant. But for now, they are not a part of the everyday US tax structure. Please keep this in mind at the ballot box in November. And has the stock market survived corrections before? They have. It has happened in 1987, 1998, 2000, 2022, and believe it or not, even in 2008. Some recoveries prolonged more than the others did. Now, while I can't predict the results of a possible upcoming correction or its longevity, or even if one will hit, real estate is always a great investment during these cycles. But how? It's because real estate provides a tangible asset with an intrinsic value, offering stability compared to the volatility of stocks. Owning investment properties can generate steady rental income, providing financial stability and diversification away from the stock market. Historically, real estate appreciates over the long term and can hedge against inflation, as we can see by this graph. Investors can also leverage real estate to enhance returns, benefit from tax reductions, and take advantage of consistent housing demand. And additionally, real estate often has a lower correlation with stock market performance. which can help mitigate overall investment risk. But the greatest advantage is people always need housing, even under recessionary times. The only drawback would be is if unemployment reaches astronomical levels, which I don't personally anticipate. I mean, to the point to where Americans couldn't even afford the rental. If unemployment were to do so, however, this would open the door to institutional investors, much like it did in '09. But don't bank on that. There are little to no subprime mortgages in circulation, and Americans today have equity in their homes. There are arms out there, but not at the level that we saw in '07. Not even close. If either situation created havoc, institutional investors would give you a run for your money. They have more of it, unfortunately, to the tune of $22 trillion. But let's look at it today, currently. The previously mentioned real estate advantages apply. And in a market that's almost seeing 9% growth in equity since 2023 in ADA and 4% in Canyon, this is better than the 3% on average you would make in the stock market. So if you'd like to know more about the capitalization rates you can obtain on a property here in the Treasure Valley, please feel free to reach out to me today. I'd be more than happy to discuss a potential investment property with you. All right, and lastly, renters, it's your turn. And as I mentioned during every single Mikey's monthly market updates, you are paying 100% mortgage interest rate. Well, you're really paying your landlord for their equity. And if you find yourself with the means and want to go ahead and set the foundation for your potential purchase coming up here in the future, please refer back to the buyer section so that way you can be in tune with your best strategies. However, if you are looking for a rental, please also feel free to reach out to me. I can go ahead and get you in touch with one and get you into a home while you make that decision for maybe a future purchase here in the Treasure Valley. So renters, I look forward to hearing from you. And as usual, thank you very much, everybody, for taking the time out of your day to watch this update. Of course, if you have any further questions, please feel free to reach out to me. I'm more than happy to answer any questions that you do have. And don't worry, I'm not going to spam you, and I'm not a high-pressure real estate agent, so I do look forward to fielding them. But again, if you are looking to buy a property right here in the Treasure Valley, or you're looking to relocate out of state, please feel free to visit my website at www.mpre.homes to start your personalized home search today, which is in more real time than websites like Zillow, Realtor.com, Trulia, etc. And also, if you're looking to make the move in from out of state, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Sellers, if you're looking to sell, please also visit my website, click in the upper right-hand corner to obtain your free home evaluation today. At least this will give you a standpoint as to where your home might be worth in today's market. Of course, I will probably end up giving you a phone call, but I'm a no-pressure real estate agent. I'll more or less give you a call to see what your intentions are, how it is I can help, and just basically introduce myself and chat. Before you go, though, if you did enjoy this content and you do want to stay in tune with it, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with these videos as they do arise monthly and other videos to follow. Also, please give me a thumbs up if you enjoyed this content. It does help out with the algorithm. Feel free to share this information with anyone that you might find that could find it useful. And I look forward to the day that we speak. Thanks again very much. God bless. And I look forward to the day that I call you my neighbor.